Thanks for clicking! All eyes were on Stats Canada this morning as it was set to release Canada's inflation data for the month of June, with most economists thinking that inflation was going to come down modestly. We got our answer at 8:30 this morning when headline inflation did in fact come in light, down to 2.7 from May's 2.9.
I was right?
With that said, it's not all celebrations, as we'll see. Measures of core inflation, those measures which the Bank of Canada looks to when deciding whether or not to cut interest rates, saw signs of acceleration. And the StatsCan numbers come on the heels of the release of the Bank of Canada's Survey of Consumer Expectations and Business Outlook surveys, the results of which are going to be, at least partially, welcome news for the Bank of Canada.
Things are good, I grant you that. Aye.
So what I want to do today is go over Canada's inflation data for the month of June, take a look at the Canadian Survey of Consumer Expectations and the Business Outlook surveys, and then discuss the outlook for a Bank of Canada rate cut next week. Speaking of next week, the Bank of Canada is set to make its policy rate announcement as well as its press conference thereafter, and we'll obviously have an update out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. As mentioned, Canada's inflation rate came in at 2.7%, down from last month's hot read of 2.9. The biggest upward contributors to inflation were mortgage interest costs, rent, food from restaurants, and insurance, while telephone services, travel, furniture, computer equipment, and fresh fruit pulled prices down. So, as long as you don't need a place to put them, prices for your phone, your furniture, your computer, and your fresh fruit are cheaper.
You're all set.
So, all in all, good news on headline inflation. And, at first glance, measures of core inflation, which strip out more volatile items like food and gas, look good as well, with CPI median dropping from 2.7 to 2.6, and CPI trim remaining the same. And while the year-over-year data does in fact look good, the month-over-month data is going to be a bit of a concern. For the first 4 months of 2024, the month-over-month data looked really good, and then, for the past 2 months now, measures of core inflation appear to be accelerating. So, while measures of core inflation year-over-year do look good, if we dig a bit deeper and look at the month-over-month data, it is a bit concerning for the Bank of Canada, which has stressed time after time that it looks to measures of core inflation when deciding whether or not to cut interest rates. So, all in all, headline inflation looking at least better, measures of core inflation a little bit more concerning. And the Bank of Canada's Survey of Consumer Expectations appears to bear some of this out, with consumers more confident that inflation is going to drop over the next year, with expectations dropping by almost a full % for inflation in a year's time. Given that the central bank has been adamant that it looks to inflation expectations when deciding interest rates, this will no doubt be good news. With that said, Canadians still think that inflation is much, much higher than that which is being reported by Stats Canada, which didn't really used to be the case, and are growing less confident about the bank's ability to get inflation back to 2% over the next 2 to 5 years. And this is a particular problem for the central bank, as inflation expectations have a way of becoming a self-reinforcing loop, where Canadians think that prices are going to go up in 1, 2, 3 years' time, so they spend money now, thereby pushing prices up. Further, and I thought this part was particularly interesting, especially for those arguing that Canadians are crying out for rate cuts, 65% of respondents said that they are doing worse off financially due to inflation, compared with 37% who cited interest rates. That adds testament to what was said by Bank of Canada Deputy Governor Carolyn Rogers at previous press conferences, that while interest rates affect those who are interested in real estate, inflation affects everyone, meaning the bank's not out to save the real estate market.
I'm very important.
And finally, speaking of the housing market, we are seeing an uptick in the number of Canadians planning on buying a property over the next 12 months, with a 1% increase in those planning on buying a house or a condo over the next year. With that said, the number of renters, ergo first-time homebuyers, planning on buying over the next 12 months actually decreased, while the number of Canadians planning on selling their home remained the same. So, a 1% increase in the number of Canadians planning on buying a home, and a 1% decrease in the number of renters planning on buying a home. So, that's another survey, this time from our central bank, showing that Canadians are not flooding into the real estate market just on the expectation of interest rate cuts.
But I have a gut feeling.
So, inflation expectations are getting better, at least over the next year, though nowhere near where they used to be. Canadians are more concerned with inflation than they are with interest rates, and we're seeing a marginal uptick in those who plan on buying a home over the next 12 months. With that said, the Business Outlook survey was a bit more of a mixed bag, with the number of businesses planning for a recession over the next 12 months dropping substantially over the last 9 months. With that said, there isn't, at first glance at least, a lot to be excited about in the Business Outlook survey when looking at the economy, though the central bank will no doubt be pleased. We've seen a plunge in sales for those businesses selling discretionary items. Firms are expecting far few shortages in labor, and expectations of wage increases are plummeting as well, which makes sense with the job market stalling and unemployment moving upwards to 6.4%. Workers now have far less bargaining power and can't demand as steep of wage increases as they once were able to a few years ago.
Glad I could help.
Yeah, make no mistake, this is exactly what the Bank of Canada was looking for. The bank wanted to cause some pain in the economy, putting downward pressure on wages, which would prevent a wage price spiral. In fact, according to BMO's Doug Porter, with the value of the dollar holding in the real estate market not taking off after the Bank of Canada's rate cut, sticky wage growth is the only remaining factor, giving the Bank of Canada pause before cutting rates.
I need you to do something for me, and I know you can.
And remember that the next time you're told that the real estate market is about to take off when the Bank of Canada cuts rates, as the real estate market taking off actually hurts the probabilities that the Bank of Canada will cut rates, and we don't get those rate cuts unless we get a weakening economy.
What is f***ing compromises in life?
And according to the Business Outlook survey, those rate cuts do appear to be working, with businesses expecting slower price growth relative to the last 12 months over the next 12 months. There are fewer businesses planning large price increases over the next year, and for businesses at least, inflation expectations are coming down. So we have these two surveys. Consumers are increasingly confident that the bank will be able to get inflation down over the next year. Less confident it will be able to continue that process over the years following. And businesses see inflationary pressures easing. Businesses see less price increases on the horizon and less demand for wage increases coming out of workers. So what's all this mean? Businesses are looking increasingly confident that inflationary pressures are easing. However, consumers appear to be a bit more cautious.
If fool me, we can't get fooled again.
Yeah, pretty much. Headline inflation is in fact looking better, but measures of core inflation are accelerating and are a bit concerning. So, will the Bank of Canada be cutting interest rates at its next announcement next week? The real answer is I have no idea. But inflation coming out of the United States is looking a little bit better. That will relieve at least some pressure on the value of our dollar. And the data coming out today, at least the headline data, is looking good as well. If the governor is concerned about managing expectations, given that, at least according to the headlines, which most people read, it looks like inflation is continuing to calm down, then he probably has some room to lower rates without reigniting inflation expectations. With that said, these measures of core inflation are going to look a little bit concerning. The governor, the Bank of Canada, may want to wait an extra read or two before deciding whether or not to cut rates further. With all of that said, gut feeling, yeah, I think they'll probably cut. We haven't seen the housing market take off, which I think was a big concern for the Bank of Canada, and inflation at least appears to be coming down. But who knows? As always, don't base your market predictions, whether or not you enter into the real estate market, on a simple cut here or there from the Bank of Canada. Take a look at your budget and whether or not the home is right for you. We will obviously have an update on the Bank of Canada's decision coming out next week, as well as its press conference coming thereafter on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.